Matthew's here. All right. Good afternoon to all of you, ladies and gentlemen, eminent guests, students who are all gathered here. Today is a wonderful occasion for the Institute where we are inaugurating the Tony James Center for Private Equity and Venture Capital. As you know, this has been made possible by a generous grant given by one of our celebrated alumni, our distinguished alumni, Mr. Matthew Cyriac, who is with us today, and you will hear from him. But I just want to think about such a wonderful occasion where an alumni comes back and gives to the Institute to do research in an area which is both relevant for the industry as well as for the academia. And not only that, through his grant, he has also honored 4 of his professors who are all with us today. And we just completed the unveiling of naming of some of the classrooms. So it's such a wonderful occasion, a great example. And I hope that many of you who are sitting here, both alumni as well as students, are inspired by it to do more research, to do great in life. And when you do great in life, think about the Institute. As is the tradition in the Institute, we would start this occasion by lamp lighting. So I would invite my faculty colleagues, Matthew, our chief guests, to come over the stage and light the lamp. Once again, request our guests to just settle down. I now invite Professor Dinesh Kumar, IIM Bangalore's director, to come and address the gathering.
Hi, welcome all. I keep reminding all my colleagues that I am director in charge, right? So people forget that and keep calling me the director. Before I start, let us all give a big round of applause to Matthew Cyriac for the generous contribution. Matthew, I have another request. Please help us find more alumnus like you, right? Because when you graduated in 1994, the world was completely different, right? I don't know how many organizations or the media were there which were trying to rank the B schools and engineering colleges and so on. So today we are heavily scrutinized, not just by media in India, but also the world media, right? The problem with that is we are competing with schools like Harvard or Stanford and so on, which is tough for many reasons. But one basic reason is if you look at Harvard's endowment, it is about $50 billion. And Harvard Business School's endowment is $5 billion, right? And if you look at the best universities in UK, both Oxford and Cambridge, both are sitting on an endowment of $5 billion or close to that. So why I'm saying this number is that research is cost intensive, right? And without money, we can't create, I mean, first of all, we can't attract world-class researchers. And it requires a lot of investment in the form of data, attracting talent, and so on. So these kind of endowment or donations are quite useful to create that kind of research centers like this one, Tony James Center for Private Equity and Venture Capital. And that will put us in the world map of excellence in research, right? And that's why these kind of donations are important to schools like us. I'm actually trying to probably motivate other alumni in the room and also the current students in the room so that we get a lot of these donations, not just for the donation sake, but that's how we can actually create a great research institute and we can actually compete with the world-class schools like Harvard or Stanford or whichever name comes to us. And soon we'll be also having an undergraduate program. You would have already read about that in the media. We are starting 4-year undergrad program in data science and economics. And again, we are looking for support from both alumnus and others because it's kind of one of its kind where probably if you look at IIMs, there are IPM courses offered by several IIMs, mostly the newer IIM, but completely on-campus undergraduate program, probably IIMB is the only institute which is going to launch very, very soon. So we are looking forward to support from everybody so that we can also make it one of the best in the world. I would like to also thank all the eminent guests who have taken time to come here to grace this occasion and share their knowledge with us. And I also thank my officers and staff from Alumni and Development Team and Dean Faculty Office. They have been working hard to make this event happen. And thank you once again coming here and supporting IIMB's initiative. And once again, thank you, Matthew, for your great contribution to the Institute. Okay, thank you. Yeah.
Thank you, Dinesh. We know you are in charge. You don't need to remind us again and again. As part of the center, we instituted a professor of a chair professor for the center. There was a rigorous search process among scholars and academicians all over the world. And finally, we are very proud to say that our own colleague, Professor Ashok Thampi from the finance and accounting area, was chosen to be the Florentry Chair Professor of Private Equity and Venture Capital. Professor Ashok Thampi, for you.
Good morning. Good afternoon, sorry. A very warm welcome to all of you. It is indeed a great honor to be here and to be the chair professor the Florentry Chair, Professor of Private Equity and Venture Capital. It is also a lot of responsibility that has been coming with this center. And I can, as I see your faces and the very distinguished panel of speakers and dignitaries here and the audience, the weight of that responsibility is also slowly dawning on me. And I hope that we will be able to do something wonderful in terms of both impactful research and do something also for the students in terms of increased engagement with the private equity and venture capital space. So, just wanted to indicate a few things that we'll probably be doing. We are still in the early phase of deciding what exactly we would be doing. But it's really wonderful that an initiative of this kind has been done, and would like to thank Mr. Matthew Cyriac, our distinguished alumnus, for doing something of this magnitude. It is not just about giving a donation, but Matthew is very much invested in terms of making this Center of Excellence, the Tony James Center for Private Equity and Venture Capital, a very impactful center, a center of excellence in terms of contributing to the private equity and venture capital industry through development of talent, the engagement with the industry, and the quality of research that we could engage in, so that the industry gains in prominence, not just in terms of with investors and so on, but also in terms of understanding the true impact of what private equity and venture capital can do. The other person that I would like to also just mention very briefly is Mr. Tony James. It is really wonderful that a person of his stature has permitted us to use his name and name the center after him, because he is indeed a pioneer and a very, very well-known figure in the area of private equity, and really appreciate that he has allowed us to use his name for the center. And the name itself means a lot in the private equity and venture capital space, and that's means a lot to us, and really appreciate Tony James' support for this initiative. It's, and it also means that we have a lot more going in terms of what is expected of us. So that again would require a lot of support from the industry in terms of what we would be able to achieve, so that we would be able to have a global center of excellence in private equity and venture capital in the Indian context and possibly the Asian context, because the nature of the industry, the private equity industry particularly, is different in the Indian context compared to what it is in the US. In the US, it has grown tremendously in the last 20, 25 years, and the context is slightly different. In the Indian context, we have multiple other issues, that is where the value of private equity and venture capital would be. And we would like to engage with the industry to be able to develop research projects, case studies that would illustrate what private equity and venture capital could do to be able to deliver value. And we look forward to your support for that, because that's something that is lacking currently in terms of adequately well-researched and rigorous case studies that could be used in the Indian context. The other thing I just want to mention is that just as education is a leveler in terms of providing opportunity and social mobility, the role of capital and the increasing role of availability of capital in supporting entrepreneurship, in terms of supporting firms that would like to grow, is a huge one. And today we see the leading technology firms that we use almost without thinking on our phones or on our laptops or so on. All of them have been supported by the venture capital and private equity space. And so, as India develops, we will need more and more of this kind of capital, which is available for entrepreneurs to be able to convert their ideas into reality by providing the kind of capital that makes it possible for them to build these businesses, as well as also for those businesses that need capital to be able to grow their businesses from early stage to fairly large one. And today we are seeing some of these early initiatives in terms of the startups that happened a few years back. Today is showing the way in terms of what it could be in terms of disruptive businesses and so on, and often some of them even going globally. So in that sense, hopefully we hope to engage with the sector to be able to do very rigorous research, which would also contribute to the wider understanding of what private equity and venture capital could do. The standards that an academic institution requires is quite rigorous, because our recognition in several ways comes from the peers that we need to convince that the reason why we say so is valid. And distinguishing between correlation and causation and the authenticity of the data and so on is a huge challenge for us. And we hope that in terms of availability of data, development of resources to be able to provide meaningful, impactful research in this private equity and venture capital space, that we would be able to count on your support. As part of the ideas for the center, we would like to increase the availability of electives for our students in terms of in private equity and venture capital and related areas. As I mentioned, develop case studies illustrating how venture capital and private equity has contributed to the development of thriving businesses. The opportunity for students to hear from the leaders in the industry and maybe curate some events which are catering to the special interests of students who are interested in the private equity and venture capital space. The establishment of the Tony James Center for Private Equity and Venture Capital in IIM Bangalore is also very uniquely positioned, partly because of what IIMB stands for in terms of excellence in education, but also because Bangalore is the hub for a lot of the innovation and startup activity that happens in India. And we are already engaged with the startup ecosystem through other centers such as the N.S. Raghavan Center for Entrepreneurship and Learning. And we hope to leverage some of these connections and complementarities to be able to make a meaningful impact in the sector. We also appreciate the support received from the Indian Venture Capital and Alternative Capital Association, and we look forward to working with you in various ways to be able to develop some material and research agendas which would be helpful in driving the center's activities. It's also really wonderful that today while we are inaugurating the center, that it is also in the midst of the presence of 4 very distinguished professors, three of whom are here in person. And, that's also really wonderful that, that we could do this in their presence. They have been pillars of the Institute and also very substantial contributors to the development and strengthening of the finance area at IIM Bangalore. So I really appreciate that you could be here as well, and honored to have your presence here as well. Now I request Mr. Matthew Cyriac to give his remarks. I'll just briefly introduce him. Matthew Cyriac is Executive Chairman of Florentry Advisors, a private equity firm focused on emerging Indian companies. The firm invests across technology, industrials, healthcare, and financial services. He leads Florentry's scale-up strategy and has backed several pre-IPO and growth stage platforms. Before founding Florentry, he was managing director and co-head of Blackstone India's private equity business. He led investments across multiple sectors during his time here. There, he began his career at Tata Motors and later worked in investment banking at Bank of America. He is known for combining operational insight with long-term capital discipline. He is a frequent investor in founder-led businesses and an active mentor to startups. Of course, he is a distinguished alumnus, and we are very happy that you could be here, and thank you really for this initiative of yours. Over to you, Matthew.
Good afternoon. I thought I'll give you a little bit of a background about how the Tony James Private Equity Center came together as an idea. So as you probably know, last year was the 50th year of IIM Bangalore, and Professor Rishikesh, the then director, started on a very aggressive mission of fundraising. So he visited Bombay, called several of the alumni. We all met, and we all had several ideas. And then I followed up that with a visit to campus. And they offered, the development office offered several options, including, you can name the OAT, you can, give money, different price range. If for library is this much and OAT is this much, etc. So I almost signed up for one of them. Then I went back and I thought, what's the point in kind of giving money for something that already exists, right? We should probably try and do something where, you can start building something that, considering that IIM Bangalore is well known and probably ranked, on the top for the finance specialization. I said, how do we do something that can reinforce that position? How do we build on that? And that's how I said that one of the emerging areas and very attractive area for a MBA student or a, kind of a business school is private equity. So that's how the whole idea of, Tony James Center came up. And, like everything, people thought, whenever people talk to me about it, oh, it's such an obvious thing, I don't think it was that well planned. It just all came together over a year. And then I started thinking about, who do you name this after? And I have my ex-boss, Akhil Gupta. Akhil and I were having a chat. And I said, Akhil, thinking of doing this, who should we name this after? So Akhil said, why don't we name after Tony James, Tony, right? And that's when I also realized that Tony is somebody who has played a critical role in my career, like George here. And George and Tony also have been together for several years. So Tony is somebody who has played a very, very critical role in my career. So it all kind of made sense, right? That's how the name and the sender kind of came together. When I called Tony, he obviously is an Indophile. He really likes India. He's been visiting India from like mid-90s, 97, 98. And he really liked India and, what goes on here.
And he said, yeah, of course, I will do it, but only on one condition. He said, you have to build something that is world class, something that is, he jokingly said, kind of worth my name, don't screw it up, right? So that was his kind of, and his thing was, if you're doing it, let's do it well, let's make an impact, let's build something of global stature and repute, which is a big burden on us, I think, on Professor Thambi and all of us involved with this. So that's kind of the leading light. How do we build something that is world class, something that is, of real high repute and high impact? I'll spend a minute on, how do I see the center? I know Professor Ashok spoke about it. At a very high level, we see 5 or 6 constituents, right? First of all, the students, the current students at IIMB, and private equity is a very attractive job destination for us. So that's one group of people that we are focusing on. Second is young professionals who is no more at IIMB or maybe graduated from somewhere else. How can we help them get private equity skill set and toolkit for them? So that's the second. Third is obviously private equity firms. Fourth is the companies that issue private, or rather take private equity capital. Fifth is the academic portion of the IIM, which is the PhD students and the professors who are doing research. So the academic research community at IIM. And the sixth is the LP community, which is whether it's local or global, LP community. Because at the end of the day, this center will be successful eventually. When I take a 20, 30-year view, how can it move the growth rate of private equity in India? And the fundamental driver for that is a capital flowing into private equity. Where does the capital come from? It comes from the LP or the investors into the private equity fund. India, if you look at it today, from the global allocation of private equity capital, India is a very, very small piece. It's not even worth mentioning. Partly because there is a lot of information, uncertainty or lack of information, because all the firms would say great stories about India. If you have, let's say, firm A bringing 10 of their LPs into India, they will talk about all the great things they're doing. But then you hear about all kind of noises about this happened in India, that happened in India. And so people get a little bit, taken aback by all of this. So can we create a platform to really understand, not as a messenger for the industry, but as a bridge of information for the industry, for LPs? That's one of the things. So one of the things that we are thinking about is having a annual 4-day kind of a private equity yatra, which is not a canvassing, not a kind of a industry lobby, but really getting people, the LPs, particularly the global LPs, understand what goes on in private equity in India and what's the reality, right? So that's one, among the many things that we talked about, that's one of the important aspects of what we plan to do. Now I want to spend a few minutes on the professors, right? Obviously, they are all doyens, and many of you here may not necessarily know them because some of you are too young to know them, right? Let me start with Professor Apte, right? Professor Apte obviously is one of those geniuses who is a IIT Bombay gold medalist, IIM Calcutta gold medalist, went to Columbia, did his PhD, without batting an eyelid, came back to India, joined IIM Bangalore, and stayed on here for his full career and beyond that. Professor Apte was obviously intellectual doyen, and those classes were very tough, particularly, they were very difficult courses, right? So I remember, once one of the students Professor Apte was writing something on the board, and he kind of got up and tried to argue with the professor that he was wrong, right? Professor was very mild, trying to explain to him. He got all worked up and trying to prove it to him that professor was wrong. And finally he agreed, no, professor, sorry, I was kind of wrong. And then professor said, you know what? I rarely make mistakes, right? But even if I do, most of you don't even catch it. So that was one joke. The second was, I remember distinctly, this is one of the few things I have also lost a lot of my memory, but some of these anecdotes just don't go away from my mind. He was doing a session on Eurobond and Eurobond trading. So then he asked a question, what's the difference between Eurobond and a Eurobond trader? People said many things. So he's finally said, the Eurobond trader never matures. Anyway, so moving on to Professor Prasanna. So Professor Prasanna, again, like his textbooks are probably in their 15th edition, or I don't know, probably more. And it was even today, and definitely at our times, was the finance book, textbook used across all campuses, all IIMs, and all other places, right? So very well respected and a great teacher, right? So I'll relate one or two incidents in his class. These are things that I distinctly personally remember, not like collected from someone. So he was talking about one day professor was standing in front of his house. A friend of his was trying to sell a puppy, right? So he said, the professor asked him, how much you want to sell it for? So he said, 500 rupees. I'm talking about 1994. 500 rupees for a puppy is a very high price. So professor said, I don't think you're going to sell it, right? Because it's too high. So the guy was there several times, and then finally the puppy was gone. So professor said, what happened? Where is the puppy? He said, yeah, puppy, I sold it. So he says, for how much? So for 500. He said, 500? So yes, I got 2 kittens for 250 each. So he was talking basically about the share swaps between merger of companies, right? It's like, so similarly, one other incident, these are all professors' jokes, not. The other one was, he was saying that he was on a board, and the board was very animatedly discussing how much dividends should we pay, right? So professor was keeping quiet, an hour went on. So the powers, of the board turned to professor and said, how come you're the professor? You know everything about this. Why are you keeping quiet? So professor said, as per the financial theory, it doesn't matter, right? Anyway, the other one was, which actually is so prescient today. In our times, when I'm talking about when we were in IMB, one of the most important financial innovation was leasing companies, right? You would have, people who are old enough here would see this leasing company, that leasing company. Today, there is no leasing company, right? The leasing is kind of gone out of. So professor's line on that was, the benefit of leasing and extramarital affairs is overstated. So now let me turn to Professor Sundararajan. So Professor Sundararajan was by the way, one more thing on Professor Prasanna Chandra. You probably know, most of you would know about Professor Ashwath Damodaran, right? He's this very famous professor at Stern School. And I think in 94 or something, he was ranked the best professor in America, right? And by the way, he got that award several times after that. But when he was first given that award, he was asked, who is your best professor? Who's your best teacher who you have ever come across? So he said, Professor Prasanna Chandra is this is way back in, by the way, Ashwath Damodar is 77, 79 from IIM Bangalore. 79. Now, turning the attention to Professor Sundararajan. Professor Sundararajan was a highly animated teacher, right? He's almost like a performer in the class, right? And we had a lot of people who had come without any accounting or any, kind of training in accounting. So Professor Sundararajan will, write stuff, and, he will just talk to people and ask questions and all of that. And he wrote something, and people struggled to think whether, main thing for the first few days was something is a credit or a debit, right? So people used to get confused. They're all very bright people from IITs and all of that, but people couldn't just figure it out. They're so new to this whole thing. So I still remember one of our classmates probably was sleeping a little bit, but despite all the animated professor's, kind of contact. So professor, like, when is it a debit or a credit? Debit or a credit? Debit or a credit? And this guy says, "Sir, I'm not feeling well." And to top it all, he was very embarrassed. There was no need to. For the next few days, he used to walk around with a muffler. One more thing about Professor Sundarajan. We had these tutors. I don't know, some of you guys who were in our batch remember. We had tutors for every batch, every subject, or the tougher subject in the first year. The idea was the students who had done well in the previous year would become tutors for the junior batch. So there was a student who was struggling, and she was in my class, and she's really struggling and literally breaking down type of thing with accounting, right? And I kind of didn't also know what to do. How much you can only help so much, right? After a few weeks, he started doing exceptionally well. So I was feeling very good, like I really kind of made a difference. And it coincidentally, just last week, I met that person and she had no idea about, this event or anything. Then we started talking about IMB and all of that. And she just started talking about Professor Sundarajan, literally like last Friday or something, last Friday. And she was saying, Professor Sundarajan was so good, I was breaking down. And apparently you took her to your home. She stayed with him for, like 3-4 days. Jaishi. Yeah. So we were, yeah, I was quite surprised actually when she said all of that. By the way, she's not on WhatsApp and all that. So I didn't tell her also that day. Then today morning I sent her the information about the event. So that is Professor Sundarajan. Went out of the way to teach people who had no idea about accounting and this whole, because most of the people, particularly those days, who come into IIM are all the left brain. I mean, accounting is also probably. But I mean, for example. So I will just take 2 minutes and kind of wrap up with an incident on George. So I was, obviously a student under George. Then I became he was my boss. And, we were traveling and we were, going somewhere. We were at the airport. And I'm sharing this. Please don't take names because it's important because, I don't want people getting upset. We met Narayan Murthy and in the airport. So we spent some time with him, and after half an hour, we saw Nandan. And George knew all of them very well. This is like, very early days, right? They were not as, they had gone public. This is 94, 96, 97, or 98 probably. So we asked Narayan Murthy where he's going. He said, I'm going to Hyderabad. And after some time, we met Nandan. Nandan also said, we are going to Hyderabad. So we asked, are you on the same flight? He said, no. We are on 2 different flights because our policy doesn't allow us to travel together. So Josh's response was, guys, you take yourself too seriously. So obviously, in this day and age of, disaster redundancy and all of that kind of stuff, it's not kind of politically correct, but but that is what is George. George is so down to earth, doesn't take himself seriously at all, and exceptional track record and capability, and still, very down to earth and kind of very simple. So that's all I have. Thank you.
Thank you, Matthew, for taking us through those wonderful memories. It's my honor now to invite our keynote speaker, Mr. Vivek Pandit. I'll just read out a brief bio of Mr. Pandit, who is a senior partner and global co-leader, private equity and principal investor at McKinsey & Company. He is a senior, he advises global private equity firms, sovereign funds, and long-term capital allocators on strategy, transformation, and value creation. He has played a key role in building McKinsey's investment platform across Asia and globally. His work focuses on energy transition, emerging markets, and large-scale operational turnarounds. Earlier in his career, he led the firm's technology, media, and telecommunications practice. His advisory work spans infrastructure, financial services, technology, and consumer platforms. He is known for driving results through deep operating insight and long-cycle capital strategy. He holds a master's in management and electrical engineering from Stanford University and a bachelor's in electrical engineering and computer science from the University of California. Vivek is a trustee of various education and healthcare nonprofits, including Magic Bus, and a fellow of the Aspen Institute. He previously served as a trustee of Aspen India and the governor at the Doon School. Ladies and gentlemen, Mr. Vivek Pandit for you.
Thank you for that generous introduction. I'm not sure who wrote it. Dean Saurav Mukherjee, Director in Charge, Dinesh Kumar, Chair and Professor Ashok Thampi, Professor Prasanna Chandra, Professor Sundarajan, Professor Varghese, Mr. Apte, Tony James, Mr. Sanjeev Mehta, Mr. Amit Jain, Mr. Subrata Mitra, and of course, Elizabeth and Matthew. Thank you for the honor to have me come and speak with all of you today. You know, I've known Matthew since 2006. And that was the time we worked together. He was at Blackstone. Of course, I was at McKinsey. And there were heady days for private equity. Heady days for private equity. Amit was there. Aditya was there. There are a whole bunch of ex-Blackstone people around. Prateek, who survived Blackstone for a month or two, I understand. Paul. But it was a time when businesses did not understand how equity could cost more than debt. It was also a time when businesses, they never wanted to give up control, but they gave up the perception of control. Decisions were made outside the boardroom, as you well know. Decisions were never made inside the boardroom back then. Investment committees struggled with India's relentless optimism, even if that optimism ran out at some points in time. And of course, there were some spectacular wins along the way. As I like to say, private equity, as others have said about India, private equity disappoints both the optimist and the pessimist. And this has been the road of private equity for a very long time now. It's wonderful to be here today. I wanted to elaborate on some of the points that were made earlier, because I believe the opening of the Tony James Center is really a tribute to three things. It's a tribute to great mentorship. Whenever somebody ascribes their own worth and value to the professors they had or to mentors they had at work, it is something worthy of celebration. So I just want to say thank you, Tony, for your incredible mentorship. Second, it's a phenomenal gesture of philanthropy, which I think we don't see enough of. I know there are actually a number of ex-Blackstone people now in current who've actually been very generous with their spoils. So Elizabeth and Matthew, thank you. Thank you for that. And also deepening public-private collaboration and academic research. I think, thank you to IIM Bangalore, because a number of the professors gathered here today will pursue some of the research we talked about. And a lot of the academic research today in this space is focused on comparing public returns and private returns, or understanding persistence, understanding how private equity improves productivity and navigates regulation, which, by the way, is often broken. And so private equity establishes the regulation is broken and then finds a way to navigate it appropriately. And then the value of going beyond metrics like IRR and then looking at private equity more holistically. And so today, no McKinsey consultant worth his weight in salt can stand in front of you without a few slides. So I'm going to take you through a couple of slides, and hopefully, since we have quite a few students in the audience and other who will be students of this subject, hopefully you'll find this useful. Okay, I promise this will not be boring. The first is, I want you to look at this slide because the industry, of course, has grown. This is deployment. But two things that aren't that well known, and Matthew alluded to it. India today represents roughly 2% to 2.5% of all the capital that gets deployed globally. If you contrast that with two facts, that India will soon represent 20% of the global working age population. We're at about 17, 18% today. India will be 20% of that. And you combine that with the fact that India will represent over 10% of incremental GDP growth in absolute terms over a period, you know that private equity is just in its early stages, right? India is considerably underweight, if you will, relative to its potential on deployment. And I do hope, and if you look at that, the question I'd put to the academics is, what opportunities will private equity seek? Where should they be investing? And I'll talk in a minute about where they invest today and why I believe they should be investing elsewhere. Second, sectors. I mean, private equity covers all forms of sectors, scale and size, as you can see here. But more importantly, today, if you go back to the last couple of years, about 70% of private equity is sitting in four sectors: technology, IT services, financial services, and healthcare. Literally 70%. Now, if you look at India's sunrise sectors, that we believe will contribute anywhere from another $1.7 to $2 trillion over the next 5 to 7 years. Incremental $2 trillion. These are sectors like medical devices, aerospace, defense system, travel, tourism, urban construction, biopharma, semiconductors, EVs, and batteries. And yeah, there are some investments there, but these investments are still small. And so what I'm going to posit to the academics in the room is that I do hope the Tony James Center will find ways to help policymakers and private capital come together to unlock the future of India. Because actually that's where I believe private capital will play a big role, and one that we value, is building the future India, not funding the past India or just finding ways to eke out returns there. And by the way, private equity has done a phenomenal job of this already in many sunrise sectors like IT services and healthcare. Strategies change. Strategies change. And for those folks who are ex-Blackstone sitting around the table, you saw this strategy change in front of you, right? The reality is that it is difficult to get things done in this country. Navigating regulation, relying on contract law, relying on judicial process is not so easy. I'll talk to you in a minute about how LPs think about this as well. But people have had to adapt. And so people have sought control. And I think there are rare people like Matthew Cyriac, whose relationships with founders, even when he's in a non-controlled position, allow him to influence them in the way that he does. So I just want to say that, Matthew, I've seen you navigate some of these things with incredible poise and influence. And that's also led to a lot of new capabilities. As you can see here, the reality is private equity was, if you go back, guys, let's face it, when we were here 18 years ago, it was a lot of young kids running around with spreadsheets and checkbooks. And frankly, operating teams were more like window dressing for LPs. They didn't really exist. Today's operating teams, though, exist. And what I want to say, again, to the academics in the room, finding ways to have private equity actively engage with those companies, actively engage with boards, and really bring, we've got a great example here in the ex-chairman of Hindustan Lever, Sanjeev, who, of course, now is chairman of L-Carotene in India and raising a fund. And I think that's a tribute to the fact that we need operating people in these roles. and the role that they play will be very important going forward. There's been a lot of challenges, and I can tell you back in 2000, and we didn't see the writing at that time, but back in 2009-10, I had been asked to write a report by the Venture Capital Association of India on India's private equity. And I recall that report was not fun, and it did not make us popular. At the time, private equity, when you look back for the few years back in 2011, if you look at this, if you were looking back, frankly, the record wasn't that good. The record was actually quite bad. And we optimistically titled our report, A Path to Resurgence. That was after we ripped up a report with the title called A Need for Resurrection. So we debated that and said, okay, we will stay away from resurrection. We'll talk about resurgence. And sure enough, the industry absolutely turned around. And you can see that in the numbers. Right today, if you look at the numbers, even if you're sitting in the median of the bottom quartile, you're actually eking out a decent return. By the way, this was not true, as you can tell over time. And so India, by the way, not only has been among the higher performing markets recently, it continues to attract a lot of interest. Something that I'm going to switch gears now for a minute from what's happening in the industry to actually talk a bit about India and India's economic development and the role private equity plays here. So private equity is a very meaningful contributor to our FDI. By the way, depending on which timestamps you take or snapshots you take, it's somewhere between 50, 55% and up to 65, 70% of our FDI. Keeping the FDI flowing, we can't finance our own growth. We're not China. We don't have that capacity. And we're also a little averse to borrowing as a country from the scars of the early 90s. And so that philosophically has left us in a position where we need to find people who are willing to partner with us on our growth. And that's where private equity comes in. And I think, as Matthew said earlier, understanding how LPs can get more comfortable with India, understanding the reality of India becomes incredibly important. And so with that in mind, I just want to say this is a very important strategic source of capital for the country. Let's talk for a minute, less known, and this is work we did a few years ago on how, so what we did was we actually analyzed, to Professor Thampi's point, I don't have the numbers here, but we looked at about 3,000 public companies and 800 private companies just to get the data set rigorous. And we compared private equity-backed companies with public companies, same size, same sector, to normalize. And what we found is 2 years in, private equity-backed companies grew their revenue line 28% higher, their earnings line 39% higher. 80 to 90% of them in every sector, those who did M&A had done it for the first time, had never done it before private equity came in. The employment growth rates, you can see this is a 5-year CAGR. They grew employment by 8.7% relative to 2.9% for non-private equity backed, in other words, public companies. And of course, export growth was 2 to 3 times the public company sample set. And then finally, this is an important one, tax contribution. So this is for companies we looked at specifically companies under 1,000 crores for this measure to understand what the intensity of tax relative to revenue was. And for private equity backed, it was 18.8% of total tax paid by those entities relative to 3.7% for the public company counterparts. And of course, the finance ministry lapped this up when we took it to them. But I want to just establish that the importance of private equity to the economy and the continued research that you will conduct here matters. I'm going to finish here with a few. So there's a piece of research we're doing right now. I know Aditya is aware of this. Joshi is aware of this. We happen to sit on a council together, and one of the IVCA councils. And so we are currently conducting research with a group of LPs. This actually has a group of 42 LPs in it. We're trying to expand that set to a larger group. But this is where LPs say India figures for them. This is about how do you, a 1 is considerably worse, a 5 is similar to other countries, and a 10 is considerably better. So if you think about this, LPs love our political stability, they love the economic stability, and they, relatively speaking, they're actually fine with us in geopolitical risk. The places they're less exciting for them is ease of doing business, tax regime, currency risk, and valuation. Some of these things we really can't control. Let's face it. We're not central bankers. We don't get control. We don't have a currency stabilization fund. In fact, I'm not even sure if we need one. But I will say this, that the voice of those LPs matters. And when those LPs pick managers, this is what they look at, right? This is by top number of mentions by the same group of LPs: performance, exit record, quality and tenure of investment team, and value creation capabilities. Interestingly, this is LPs, by the way, we're asking LPs about India specifically. It's interesting to note, not many worried so much about the size of fund or the reputation among intermediaries or succession planning. What they cared about was performance. And so as you think about the research that gets conducted at the Tony James Center, I would find ways to over-index on those things that LPs actually do care about. By the way, we also have ratings from LPs on how they think about Indian managers. I won't share that with you today because that's giving away too much today. We haven't released the research yet, but I thought in the honor of this center, I'd share a few early findings. Last 2 points. India is home to 1 out of 13 unicorns globally. This is the private equity and venture capital industry. I know I was speaking to another professor earlier today, Saurav, who focuses a little more on early stage. What I'll say about early stage is simple, right? It reflects the optimism and high value we place on ideas. Early stage represents India's optimism and the high value we place on ideas. And there are a few places where it really outshines, right? They outshine on employment growth. They actually outshine on gender. So if you look at corporate India relative to startup India, the number of women employed as a proportion of total employees by startup India is 3x relative to corporate India. So by the way, I'm saying this not to make a point about gender, but to say that these companies do matter to us. So my last point, and I'm going to finish off here, is unicorn. So unicorns are great, right? They give us hope. People pour their heart and souls into them. The media loves to track them. Anything that happens, anything that's good that happens, it gets reported. Anything bad that happens gets reported 5 times over. The reality is that on the question of governance, if there was one wish I had for the world of early stage, it's just to clean up governance as much as we possibly can. And these are a few facts. There are not that many directors. The directors that we have today, boards of startups still look like investment committees of investment firms versus boards. We don't have enough independence. And you can see the number of independents. 61 had 0, 1 had 8. 8 had 1, and 14 had 2. And of course, there are not that many women or diversity on those boards. So with that, I'm going to conclude and just say, I'm incredibly honored to be here today. And I know this is a celebration of IIM Bangalore. It's terrific faculty. And I want to add a note that it's also a celebration of Matthew and Elizabeth and their generosity. So thank you again for having me.
Thank you, Vivek, for that very data-driven, insightful presentation. I request Professor Jitamitra Desai, our faculty member on IIM Bangalore board, to give Vivek a token of appreciation. Vivek, just once again on the stage. Our next speaker is Mr. Sanjeev Mehta, Executive Chairman of L Catterton India and Chairman of L Catterton Asia, where he leads the firm's consumer-focused investment strategy across the region. He joined this organization in 2024 through a joint venture partnership following a 32-year global career at Unilever. Sanjeev served as a CEO and chairman of Hindustan Unilever from 2013 to 2023. Under his leadership, HUL's market cap rose from $17 billion to $76 billion, making it Unilever's most valuable business worldwide. Prior to that, he held CEO and chairman roles at Unilever businesses in Bangladesh, Philippines, and the MENA region, and was also president of Unilever South Asia and a member of Unilever Leadership Executive, which is Unilever's global executive board. Sanjeev is a chartered accountant and holds a bachelor's in commerce. He also completed advanced management program at the Harvard Business School. At present, he serves as a non-executive director on the boards of Air India, Dr. Reddy's Laboratories, and Danone SA, and as President Commissioner Non-Executive Chairman of Unilever Indonesia. He is a member of South Asia Advisory Board of Harvard Business School and Chairman Emeritus of Vikasa, a coalition of top Indian and multinational companies. We are honored to have Mr. Sanjeev Mehta here.
The deans, the professors, the directors, the students, the faculty members, ladies and gentlemen, good afternoon. And first and foremost, thank you, Matthew, for inviting me to be here. It indeed is a day for celebration. And I would like to thank Matthew for germinating an idea, executing an idea, and for IIMB for accepting his idea. I think it is very much needed. If we were to just look at it from a lens that if India was to deliver the kind of growth we have delivered in the last 30 years, and if we were to take about 3-4% inflation, we are talking about on a nominal basis, India's GDP would double in the next 7 years. So we're talking about adding $4 trillion. Just think of the amount of capital the country would be needing. And capital from all sources and private equity, like Vivek presented, is still a small part of the total capital requirement or the need that the country possesses. So it has a massive runway ahead of it. And it could not have been more opportune to set up this center. Now, during my 10 years at HUL, we did a rather uncommon feat of delivering more dollar market cap than the parent company. And my talk today is going to revolve around this story. Now, purpose by its very nature transcends making money, just like what I think Matthew has done today. It is about people coming together to do something they believe in and allowing profit to follow consequently rather than as an end. But there is a paradox. It is hard to fulfill a purpose in the absence of money. So purpose-driven organizations either must rely on donations or benefactors to sustain themselves, or they must become self-funding through their own profits. Is it possible for a company to strive for higher purpose while also delivering solid profits? Some have argued that pursuing goals other than making money means by definition spending on things that aren't profit maximizing. Others have countered that by investing in worthwhile causes, the company is doing something intrinsically valuable that will generate a long-term payoff. For a long time in the Anglo-Saxon world, the role of the business was defined by Milton Friedman's thinking, a business is business. He was a proponent of ideas that business should primarily focus on maximizing profits, of course, within the boundaries of law. The changing landscape and the societal expectations have led to a more nuanced view of the role of the business in society and increasingly puts emphasis on responsible and sustainable business practices. This acknowledges that businesses have a responsibility to balance profit generation with ethical, social, and environmental consideration. This broad view has its cynics, its shares of critics, and of course, controversies. If purpose is perceived as a marketing tactic rather than a genuine commitment to making a positive impact, or if companies do little else with a purpose statement than post it on their website or hang it on the boardroom, then there is little likelihood that it will confer much benefit. Similarly, if the purpose is ambiguous or subject to frequent changes, it can lead to confusion. Very often, stakeholders, including customers, employees, investors, have differing expectations regarding the role and impact of an organization. Balancing this perspective does become difficult. We have also seen leaders camouflage their underperformance by talking about purpose. The important question is not whether there will be some tension between profits and purpose. Of course, there will be. Instead, the question to ask is, how can this tension between purpose and profits be best managed? What should a company put in place to ensure that its higher order purpose isn't squeezed by the short-term profit seeking? How can entrepreneurs and leaders ensure that employees keep these dual goals in mind on a day-to-day basis? And how can this balance be achieved on a long-term basis? There are numerous partly overlapping views on what drives motivation in companies. Researchers at MIT had discovered that the company can sustain its sense of purpose over time while still achieving a solid level of profitability based on a perspective known as the goal framing theory. Goal framing theory starts from the idea that at any moment, people focus on specific aspects of their work and ignore many other. When employees are concerned about feeling good, about having fun, they look at what can help them achieve their hedonic goals. When the major concern is money, they would be looking at how do I maximize my bonus? And when the major concern is to realize a common goal, then the company, generally the employees all come together. And if they are inspired by that purpose, they work together to realize that goal. That's called pro-social goal. Now, what factors influence the relative strength of this type of goals? They vary a lot. Of course, individual differences play a part, but much stronger influence is the stimuli employees receive from those around them. So the challenge becomes how to make these kind of goals more salient and more meaningful to employees. Now, important bit is to understand that alignment of goals is an oblique and not linear in most cases. There is an implicit belief that all activities should be aligned in a linear and logical way. The language used from cascading goals to key performance indicators is to reinforce this sense of alignment. But goal framing theory suggests that the most successful companies are balancing multiple objectives that are not entirely compatible with one another, which makes a simple linear approach very hard to sustain. At HUL, we never talk to our employees that our goal in life is to increase market cap. We said our mission is very clear to make sustainable living commonplace. And if we look after the interests of our consumers, our customers, our employees, our suppliers, the environment, and the society, shareholder value will get created. Now, let me share some thoughts on how organizations could pursue the path of profits through purpose. Now, very often we think that purpose is a lever that can be pulled. Rather, it exerts its power as a deeply held commitment that is shared throughout an organization. Purpose makes a difference in organizations only when it changes the way the people think, behave, and operate. Purpose inspires people by illuminating the priorities of an organization that most naturally flow from its identity. During the COVID days, I used to do virtual factory visits. Let me give you a short story. This is about May of 2020. All of us, most of us, were safely ensconced in a home. I was visiting virtually a soap factory, and I was speaking to a blue-collar worker. I asked him, "आपको डर नहीं लगता काम में आने से?" वो बोलता है कि सर डर तो बहुत लगता है। तो मैंने बोला कि आपको डर लगता है, आपकी फैमिली क्या सोचती है? तो ही सेड जब तक मैं वापस नहीं जाता हूं वो काफी घबराए हुए रहते हैं। तो मैंने उनसे पूछा कि आपको डर लगता है, आपकी फैमिली बेचैनी से रहती है, लेकिन आप काम करने क्यों आए? He looked at me for a while, turned around, picked up a bar of Lifebuoy from the line and said, "Sir, इससे देश की सुरक्षा होती है." Now that is purpose. That is living the purpose. This is not about framing it. At HUL, we helped all our employees help discover their purpose. Not only help discover their purpose, but we helped them implement their purpose. And I think that's gone a very long way in helping establish the true culture of the company. An effective purpose must also be dynamic. Leaders need to stop from time to time and ask, how are we living our purpose? How can we do it better? How do we measure that what we have set out to do, we are making a difference? Now, the purpose should also align with the company strategy and what the company is doing. If it is completely dealing to the purpose of the business, then the purpose that you intend to achieve, where you will not be able to sustain. Let me give you another example. We have the mighty rivers in our country that flow down from the Himalayas. But for various reasons, we have not managed our water resources well. And in another few years, in a decade and a half, if we don't correct the situation, the water supply will be half the demand. Our groundwater tables have gone down significantly. Now, if you look at our business, when you get up in the morning, you brush your teeth, hopefully with Pepsodent and Close-Up, you require water. You want to have a good cup of tea. Hopefully it would be Taj Mahal, Brook Bond, or if you want, you're in South India, you want coffee, it would be brew, it requires water. Then you want to have a nice shower. It will be Dove or Lifebuoy or Lux, it requires water. You want to wash your beautiful tresses. It will be Tresemme or Dove or Sunsilk, it requires water. You come out squeaky clean, you want to wear clean clothes. It will be washed by Surf Excel or Wheel or Rin, it requires water. Then you want to have a hearty breakfast. The dishes would be clean with business. So we then decided we can't be sitting on the sidelines and bitching about the problem. So we started a journey. How do we help the country manage its water resources? We brought in experts. We brought in our own management team. We started working on the demand side and supply side. A few villages, a few tens of villages, a few hundreds of villages. Now we have worked in thousands of villages. And in the last 10 plus years, we have created a water potential of 3.6 trillion liters, which are enough to feed the drinking water needs of the entire population for 3 years. Now, that is still a drop in the ocean because 80% of the water is used for agriculture, guys. But however, we have created an ecosystem where villagers can learn from HUL and help transfer that learnings. And hopefully it will cascade, not just to 30,000 more villages, but hopefully to all the 640,000 villages that dot our country. So it's very important not just about purpose, but also measure the impact. That becomes extremely clear. Now, when I was setting up the joint venture with El Caterton, I asked myself, what am I setting out to do? After thinking a lot, Vivek, picking up from what you said, I said we need to create a firm with three overarching goals. One, of course, we have to be the provider of private capital. The second important bit is how do we help our investee companies in terms of capabilities that are distinctive and hard to replicate? And the third important bit was how do we help the entrepreneurs transition from a hustle enterprise to the making of an institution? So these are the three overarching goals that we set for ourselves. And I believe that companies that have defined a values-based core purpose gain many advantages. Greater focus, more engaged employees, more loyal customers, and of course, better financial performance. Ladies and gentlemen, it should always be value through values. Thank you very much for listening to me.
Thank you, Sanjeev, for explaining to us the link between purpose and profit and the purpose of purpose in business. I now request Professor Mukta Kulkarni, who is our Dean of Programs, to hand over a token of appreciation to Mr. Mehta. Our next speaker is Mr. Subrata Mitra, a partner at Axel India, where he has led early stage investments in some of the country's most successful startups across fintech, enterprise software, healthcare, and infrastructure. He joined Axel in 2008 following the merger of Erasmic Venture Fund, which he co-founded. He has backed category-defining companies including Flipkart, Myntra, Mu Sigma, KyoteFit, NinjaCart, Molix, JustPay, and others. Known for his product-first approach and long-term founder alignment, he remains a key figure in India's venture capital ecosystem. Before his venture career, he was the founder of Firewhite, a mobile software company, acquired by Ubiquio and later merged into Mobile Planet. He also served as managing director of Tavan Technologies India operation. Subrata holds a BTech in computer science from IIT Kanpur, a master's from University of Delaware, and a PhD in computer science from the University of Illinois, Urbana-Champaign. He's a board member at Enstage, Kirusa, Perfint Healthcare, Flipkart, Myntra, NinjaCart, and Let's Venture. He also serves as a fund advisor to Jungle Ventures. Nobody better to tell us about the center than Mr. Subrata Mitra. Thank you so much. Can I get a...
Yes, you will need a mic.
Yeah.
Hello. Matthew, thank you so much for bringing me in this excellent crowd. Distinguished guests, students, and all the former alums of IIM Bangalore. Multiple touch points for me with IIM Bangalore here. One is one of my other partners, Mahindran Malachakran. He was one of your, I think, distinguished alumni also now. He was here between 1990 and 1992. And then I used to live not far from here, where Marty Krishnan, who was the previous head here, his father was actually my neighbor. And, he once suggested, sorry. When my son was really young, yeah, you could hear me. When my son was really young, he suggested that there is this beautiful tennis court back here at IIM Bangalore. And my son was a tennis enthusiast. So there was a good coach coaching little kids here early in the morning. So I would bring him here and then, do my morning walks around campus, which is also very beautiful. So thank you, Matthew. Thank you, Elizabeth, for having me here. I really loved the way Matthew talked about his teachers. As you'll find out during this, short talk today, that I have actually tried to be a little, counter to whatever most conventional wisdom would point you to. So I actually learned a lot, not from my teachers, but from fellow students at IIT Kanpur. And, computer science at IIT Kanpur, all these kids are really, really smart. So I'll name two of these people. Dinesh Katiyar, who was All India 13th of our batch, one of these, people who graduated with all A's and went to Stanford to do his PhD in computer science. Among other things, he could very succinctly explain any concept to you. So you sit with him for half an hour, you can save going to class for 2 hours. And that's exactly what I did. And my teachers don't know me today, but all the students do because I used to hang out with them a lot. The other guy that I must mention here is one Mr. Arup Datta. He was kind of, he studied before IIT in Kuwait. So his, I would say, performance in math was, a little bit different from everybody else's. But this guy was so meticulous. He would go to every class, almost, do a photocopy of whatever was there on the board and bring it back. And then that evening, whoever he could find, other guys in computer science, he would call them to his room. And because this guy was from Kuwait, he would give us Kit Kats. Back in those days, they were very precious, very hard to find in India. For a Kit Kat, if you could explain to him what the professor taught him during the morning. So both of these helped me a lot. On one side is super brilliant guy telling me how to, concisely understand a topic. And then this other guy who was sort of struggling, and I had to read his notes and explain to him what I was trying to teach him. And goes without saying, I went and hired Dinesh into Excel, once we became Excel. And then I let, so Arup has done really well. He is actually a hedge fund manager in Boston. So I let him put, several checks into my company. So for all the students here, whenever you help or take help, it just comes back around. So keep doing that over and over again. You will actually build a great organization. Now the more mundane stuff, I was going to, with help from Matthew, I just put a few slides together as to what we do in our day job. Some of you may have crossed paths with us. So here are some other companies that have kind of, I happen to be on the board of Flipkart from day zero almost. It is actually amazing because I got 25% of the company for about $800,000. And then the company, eventually we exited at 40 billion. So little something to write home about. But the beauty of it is, again, you have to go contrarian to be able to do this. Because at that time when I was putting 800, the most convenient way for us, we were a really small fund, would be to put 500 and get somebody else to put another 500. I and Sachin, who was the CEO of the company at that time, we went around, every nook and corner, talked to every VC in town. Nobody wanted to accept the challenge of building e-commerce in India back in the days. So I still loved these two guys so much that I went and invested the 800. Probably the best thing I've ever done in my life, in my investing career, and it worked out very well. Some of these other guys are, some of my partners have been able to identify these companies. They're all super great. Acco is one I have worked with very closely. Again, Bluestone and Urban Company. In the light of what Sanjeev was saying before us,
get soap at home, maybe Flipkart can deliver that for you. Wanted to look really fresh for your meeting, you can call in Urban Company to kind of give you a nice little beauty at home spa kind of treatment. Sorry, being contrarian isn't easy. Great. So we'll move forward. Oh, this one actually works. And this is something that you probably already know. A lot of you guys are already part of this ecosystem. If you look at what has happened in India, in some of these areas that we invest in, things have actually gone like in a hockey stick from left to right. These are the four main sectors that we actually work with. What we call consumer, then AI and software, and for us, most of AI and software happens to be companies that are global in nature. We happen to, just like Flipkart, happen to write the first check into Freshworks. Again, $1 million for about 22% of the company. IPO'd at 13 billion. Unfortunately, didn't do so well after IPO, but we sold, let's say, between 6 and 9 billion. So pretty good, return. Right now, we are kind of in the process of, figuring out what to do with our shares at Swiggy and another little company called Blackbuck, which is like this trucking company that tries to connect toll booths and, does a lot of back-end processing for B2B movements of trucks and consignments around India. But equally important, B2B companies like Inframarket and Zetwork and Moglix and all of these are part of our repertoire. On fintech, again, I happen to be lucky enough to have incubated PhonePe within Flipkart, and I'm sure more than half the people here probably use PhonePe, maybe more. 40% of today's UPI transactions are on PhonePe. And for those of you that don't know JustPay, it's actually an equally vibrant company. So all the people who don't use PhonePe are probably touching JustPay for every transaction that you do online. So either Google Pay or Amazon Pay, the back end of that is powered by some little company called JustPay. I think one of the previous speakers talked about venture capital and PE money in India. It sort of just goes on to say that except for this blip between, let's say, 2021 and 22, we have seen a fairly steady increase. It is still small. I think the argument has been made with respect to the size of India and what we can potentially be. So we are always pitching to our LPs to increase our fund sizes, and so does other venture funds in India. But this is just to give you a sort of a perspective of where we are on the map. This data is a little dated. It's 2024. So 2025, I guess, both the public markets and the total VC-backed companies' market caps are different, a little bit different. I think I saw 350 billion in one of the slides before. So maybe that's probably right. If you assume, Zomato at 30 plus billion and a Swiggy at about 10 billion, it'll probably all add up to about 300 billion. But the interesting part is we are just about getting started. If you look at where technology is today, everybody in India, so 1 billion smartphones, most of them are data connected. And now with the advent of AI, both consumer technologies and B2B technologies are accelerating faster than ever before. So the internal India market is getting primed for disruption. So a lot of what you see are older companies will probably get either changed or reshaped or completely converted by new age companies. And this is again, why we have won. So back in 2007, we actually bet a big part of our small fund in doing digital stuff. So and digital has obviously outpaced everything physical in all of these sectors in a resounding way, and which is why I think a lot of our companies have done well, and we have been able to kind of have a position on the map today. And this is what we are looking at. Again, the same four sectors. These are some of the younger companies that we are currently working with. You may not know a lot of these, but hopefully, some of you should get to know some of these companies in the next 5 to 10 years. Amagi is actually one which is becoming very, very dominant. It's probably going to go IPO later in the year. Emma is a company which kind of built agentic frameworks even before agent was a real word. So they were probably one of the pioneers of building agentic frameworks. Miragi is actually a very interesting company in India. A lot of youngsters, in India, even in tier 2, tier 3, they spend a lot of their net worth during marriage. And the segment that we looked at, even if somebody is making, let's say, 1 to 2 lakhs a month, they end up spending between 10 to 25 lakhs for this one event, where either they get it from their parents or they kind of contribute some of it themselves, or they even sometimes in tier 2, tier 3 towns go out and take a loan. So Miragi is this single point, sort of platform which puts together all the services for a young couple getting married, and they put them in the center and kind of help them make all these decisions about which venue to choose, what kind of catering to have, how should this program be planned, all of that kind of stuff, and so on and so forth. This is just sort of we have 300 companies now, active companies in our portfolio. This is just a smattering of some of the interesting ones. And then I'll actually just kind of, in the interest of time, just kind of flip through the rest of it. We have talked about bits and pieces of it before. And then directly go to this. I was trying to, with the help of Matthew, we got on a call yesterday, and we were trying to just kind of figure out what could be some of the areas where this new center could, help. And I looked at maybe 2, 3 different aspects of it. One is, how is India different from the US? Obviously, US is this big behemoth where venture capital and PE has been around for like decades. So obviously, we had to learn from them, but we had to figure out how we are different. And some of the places that I see that we are different is just sort of, the size of the outcome. You look at Valley today, everybody is chasing these Gen AI companies, and some of them are getting valued at hundreds of billions of dollars already. OpenAI supposedly will do around now at 350 billion, and some of their competitors are at 150, 160 billion. So while that is a reality there, and all you had to do is own 1% of that, and, an Excel fund will get paid over multiple times over. But in India, we have a different reality. We have these large companies coming out now. So let's say, a Zomato, which is 30, 40 billion, and a Flipkart, which is 40 billion, maybe a PhonePe, which will end up being, 15, 20 billion, but they don't happen so often. So there is this paucity, or there is this length of time that you have to wait in order to get these returns. And the number of such returns are also, just about, the hockey stick is just about building up. So I see that there is a lot of difference between the two markets. And therefore, people who are coming into venture capital now in India, they need to be given some kind of guidance as to how to go about India in a sort of a structurally different way, as opposed to copy what was happening in the West. I mean, and we did this very well because we had this mothership called Axel, which is like 10x the size of what we had in India in terms of dollars to invest. But we still told them that we want to be our own bosses here in India, and we want to do the stuff that is locally viable. So we don't want to go chase another Facebook, but we want to build Flipkart, right? And for them, Flipkart was like very different from what they normally do, which is software, because the operations of Flipkart is probably the most important part of that company being successful. So we need to kind of educate the next generation of VC partners as to how India is fundamentally different. And here are some of the courses that I thought we could model things after. We send a lot of our early entrepreneurs to this program called DYDX, which is run in Stanford. And then I'm sure a lot of you have heard about the Kaufman Fellowship, which for venture capital is actually a very good sort of a concise nuggets of information that help you being a good VC in the West. And like I said, we can now, with the kind of data that we have, several hundred companies which are in this either already a unicorn or close to being a unicorn, and then another 1,000 or so VC-funded companies. We do have a lot of data to help them kind of figure out how to build their career in a constructive way in India in the venture capital ecosystem. I think that's it. Thank you so much. Thank you for listening.
Thank you, Mr. Mitra, for telling us about this exciting world of investing and as well as laying out a roadmap for the center in terms of research and activities. I now request Professor Manaswini Bhalla, who is the chairperson of our MBA program, to hand over a token of appreciation to Mr. Subrata Mitra. We will actually now have Mr. Tony James talking to us remotely as part of the inauguration of the center. As we try to, we can already see him online there. Give me a minute, Mr. James, to read out about you. Mr. Hamilton Evans Tony James is the former executive vice chairman of Blackstone, one of the world's largest alternative asset managers. Over nearly 2 decades at the firm, he played a pivotal role in shaping its growth, institutional culture, and strategic direction. He joined Blackstone in 2002 as president and chief operating officer, where he led the expansion of the firm's platform across private equity, credit, real estate, and hedge funds. He was instrumental in major milestones, including the $39 billion acquisition of equity office properties and Blackstone's landmark IPO in 2007. In 2018, he stepped into the role of executive vice chairman, continuing to advise on firm-wide strategy. He retired in January 2022, concluding 20 years of transformative leadership. Before Blackstone, James served as chairman of global investment banking and private equity at Credit Suisse First Boston, following its merger with Donaldson, Lufkin, and Ginbreit. He spent nearly 20 years at DLJ in senior leadership roles. He holds a BA magna cum laude from Harvard College and an MBA from Harvard Business School, where he was a Baker Scholar. He currently serves on the boards of Costco Wholesale and Metropolitan Museum of Arts. He remains active in civic and philanthropic causes across the US. We all realize how lucky we are to have Mr. Tony James address us.
Well, thank you very much. And I'm sorry I can't be there in person, but I am incredibly honored to be associated with this amazing institution of IIM Bangalore. It has a history of attracting such incredible talent. And I want to thank Matthew Cyriac in particular for his generosity and his vision to make this center happen. Matthew combines huge intelligence and intellect with amazing tenacity, and that big electric smile of his makes him irresistible. My own journey started in India in PE in the 1990s when we opened an office right there in Bangalore, run by your own George Varghese, who has been a professor at IIM Bangalore. George's first hire was a bright young graduate who had just graduated from IIM by the name of Matthew Cyriac. So we've come full circle now. Matthew's gone from student now to business leader. Thank you, Matthew, for all of that. All of us have come a long way, though, not just Matthew, and so has India. When we started there, India's embrace of capitalism was somewhat ambivalent, honestly. Now India is poised to move into global leadership role on many, many fronts. I believe that the private equity and venture capital can play a critical role to facilitate this growth and development. Some might ask, why does India need private capital markets when it has such a robust public equity market? Here in the West, our experience, especially in the US, is instructive. In these markets, private equity and venture capital have been significant engines of growth. We couldn't have the creative entrepreneurial sector that distinguishes the US from other regions in the world without these sources of capital. Traditional public markets are generally closed to new companies and transformational entrepreneurs that want to disrupt the existing order of things. And these companies require private capital as the fuel required for them to achieve their great dreams. This, of course, acts as a magnet to attract and retain talent as well. How many great Indian entrepreneurs and executives, from Satya Nadella to Sundar Pichai at Microsoft and Google on down, have left India and now are making their mark in the US? There is no need for that. This could happen in India if the private equity and venture capital markets develop where they can accomplish their goals right there at home. But in addition, private capital markets allow companies to raise capital faster and more effectively. They therefore lower a company's cost of capital and increase the speed to market, enhancing a company's and the overall economy's global competitiveness. And finally, robust private capital markets open up new ways for savers to invest and earn higher risk-adjusted returns that are uncorrelated with public markets, bonds, gold, and other traditional asset classes. Of course, the role of governance of private equity in the economy may or may not be, in the US, may or may not be right for India. Despite the potential to drive growth, private capital comes with some challenges. It is less regulated and not always well understood. It tends to concentrate economic power into fewer hands and private hands. It can create huge amounts of visible personal wealth, which is sometimes controversial. It challenges existing businesses and industry structures and can be a disruptive economic force, in a good way, I believe, but disruptive nonetheless to the traditional players. And it often represents capitalism in a most unbridled form by focusing more exclusively on shareholder value creation. There are controversies around all these issues, and this is why the creation of this center at IIMB is so important. The center can promote understanding of private equity and venture capital, a critical first step to managing its evolution in India. It can provide an educational forum for the business community on how to make the better use of these tools. It can provide an open, objective forum based on rigorous academic research to debate policy issues. And it can be a credible voice to legislators, regulators, and the press, as well as investors on critical issues. In summary, with the right leadership and support, the center can provide a critical missing bridge between academia, business, and government. And in so doing, it can play an important role in the healthy economic development of India. Thank you.
Thank you, Mr. James, for addressing the gathering here. And we really hope that we can have you in person at IIM Bangalore so that you can see the center, how it's moving forward.
I certainly look forward to that. I love India and Bangalore in particular.
Thank you. You know, I have been quite lucky to read very impressive resumes today, one after another. And here is one of that. Mr. Amit Jain, our next speaker, is the Managing Director and Head, Carlyle India Advisors. Before Carlyle, Amit spent a decade at Blackstone India as Senior Managing Director, where he led private equity investments and served on the boards of EPL, Fino Payment Bank, Akash Educational Services, and Sona Comstar. He previously worked at McKinsey & Company in India and was manufacturing head at Unilever. Amit holds an MBA from the Indian School of Business, Hyderabad, where he was a gold medalist, and a BTech in Mechanical Engineering from IIT Kharagpur, where he graduated with a silver medal. Incidentally, the silver medal is given to the department topper, so that's also an equivalent of a gold medal. So we talked about Professor Apte going anywhere and wherever he went, he got a gold medal. Now we have Amit here to follow his lead. Amit currently serves on the boards of several Carlyle portfolio companies, including Quest Global, Piramal Healthcare, VLCC, Viyash Life Sciences, Highway Roop, and Strata Geosystems. He is also a member of the Executive Committee of the Indian Private Equity and Venture Capital Association. Mr. Amit Jain, over to you.
Thank you. Thank you. Good evening. This is truly a tough act to follow. You kind of heard the best in the world. I really mean it. And to follow Tony James and Matthew and Vivek, and it's personally daunting. And I'm saying it in all seriousness for two reasons. Number one, a few years back, I used to be in a classroom with one professor, and I was with the crowd. So you can kind of wish away. Here, the setting is completely reversed. You have some sort of very seasoned senior professors, and I'm on the other side. So there is a degree of nervousness. In my 20 years, I spent time with three firms. Hindustan Lever, my first job out of IIT. McKinsey, my second job. And third, which is Blackstone and now with Carlyle. Senior leaders which I worked for and worked with are all here. So I really think this is some kind of a ragging session out here. The best of the professors, all my bosses, right? But I think on a serious note, it is really a personal moment for me. It's truly profound. It's just not an inauguration. From my standpoint, here I am. I started my career in private equity. Matthew hired me, and Tony James served on the investment committee of all the deals I took. So life couldn't come a full circle, and it's an incredible honor to get a few minutes to just share my perspective on this. So thank you, Matthew, for what you've done. And there are two topics I want to touch upon, and I think some of the other speakers, Vivek, have done a phenomenal job of talking through PE, VC, so I'm not going to bore you with charts. I didn't like professors who came with many charts. I love people who did whiteboards, so I'm going to be chartless for the last session for you. But two topics, I think, which are of relevance. One is mentorship. And the second one is truly why is this center and why am I excited? And after he spoke to Akhil and Tony, we had some conversations. And I genuinely believe this is one of the best gifts this country could have. And I want to spend some time on why I think so. But I think let's talk about mentorship. All of us really do come across people in my life, the gentleman sitting right here, they somehow come from somewhere in some corner and make so much difference. And we often don't take time to recognize. If you go back, actually, Indian society and history had enough recognition for it in form of Guru Purnima, which just went by. And I do think that this is the best celebration of Guru Purnima in the modern day and modern day India. So I think big congratulations, Matthew, to bring our society, our value system, respecting people who make a difference to us. I think if nothing else, by end of the day, do have your snacks and have a drink, but spend 30 seconds with yourself saying thank you. If those people are in person, go say thank you to them. Else just remember them. And it is truly, what you've done to bring gratitude and gratitude to mentors. I've only seen in farewell speeches and retirement speeches. To make such a bold expression and an open expression to say that you, Mr. Tony James, have made a difference to us and come make a difference to the world and India here. I think only Matthew, somebody as forward-looking like you, can think about it, well supported by Elizabeth. So recognized mentorship. Me, Aditya Joshi, some of the colleagues from Prateek, Pravesh, we all benefited from the personal mentorship by this gentleman. And I can't begin to imagine when this concept of mentorship gets institutionalized in the form of Tony Center for private equity and venture capital. Let's talk about the second topic, which is private equity. It is slightly a different business. On a lighter note, I would say venture capital is a tough business. It's a tough business because you literally have a gentleman with a PowerPoint. Sometimes you don't even have a PowerPoint. So you have to be a visionary where you can see the future and see something which doesn't exist. I never had that capability in all sincerity. So I never chose that path. And we do what is called a late stage private equity, where there's enough data, there is enough history, but we have to just see that differently. So you also, and particularly this for students and early aspirants, figure out what you want to do. You want to see the future which doesn't exist and you have the capability and the eye for it. Are you the Shiva with the third eye, like Subrata here is? Or are you the one with two eyes from IIM? And you can look at data, analytics, but look at it differently. Look at it with insight as Matthew did and make a difference. And I'll come to that very shortly. But what is this business? It took me a lot of time because I came running factories, a little bit of consulting, lovely charts to support at McKinsey. And most businesses at McKinsey and Hindustani were very simple. You take milk, you make ice cream. You take yarn, you make fabric, you make cloth. You take cocoa, you make chocolate. The input and the output was substantially different in its touch and feel. You come to private equity, input is money, finished good is also money. So you keep wondering that what value am I really creating? And it took me genuinely a lot of time to really appreciate what the business of the business is, as Sanjeev spoke about, what the purpose of the purpose is. The business of the business is, in my realization, having done late stage private equity I'm talking about, maybe in your business, vision is a moat. In our business, we buy risk and sell opportunities. That's fundamentally the business. That you go out, you're a buyer of risk in the market. You're not buying textile, you're not buying fabric. You're really buying risk. Now, when you buy risk, that's the core model. In the Western world, the translation of that model from risk to opportunity took a different form. And India, and I think a lot of speakers spoke about this, has its own shape and form around it. Our translation, the manifestation of this business model has taken a different shape. And today, my assertion is the shape it is taking in India at the scale and the complexity we are operating, a center like this can make a pivotal difference. Now, let me give a window into what those differences are. Number one, our literature is so much around this concept of LBO. There's a famous private equity firm. There's a case, I think, KKR, RG, and Nabisco, which is often taught in business school. I don't know if it started at IIM Bangalore. Because the first time buyouts came into the world, it was on the back of the premise of putting a lot of leverage. And therefore, the Western world taught the PE professionals LBOs. In India, we do buyouts. But the core, and often the only investment thesis, is actually growth. We got to grow because India is growing. And I think Sanjeev spoke about it. And Mr. Modi speaks about 2047, Viksit Bharat, and all the investment themes underlying are playing to that Indian economic secular growth, the demographic which is sitting in this room. And when you do that, you actually do GBOs. You do growth buyouts. Now, is the playbook of LBO applicable on GBO? Actually, no. You double click that. More often than not, US companies, they do what, private equities in the US do carve outs. What's a carve out? You have a very big company, something similar to what our friend here, Sanjeev, used to run or be part of, or I was part of. And in that, you often have orphan segments or businesses which don't get the due care, the diligence, the focus right at the top. And one day somebody wakes up and say, you know what, I might as well carve it out. But in the process, there's often fat in the system. So private equity will go and cut fat, cut cost structure, rationalize, put some leverage. Flip it to India. Wherever we have bought businesses, forget cutting fat, we actually add cost. And the way to think about adding cost is we actually add muscles to businesses. When an Indian entrepreneur builds businesses, he's equivalent to 5 human beings. He's the sales guy, he's the ops guy, he's the secretary, and he's the chairman. So you often go and build businesses with cost structure. You build digital, you build capabilities around business development, you sometimes build e-commerce capabilities, what have you, depending upon the context of the business. So from cutting costs to actually building muscle, fundamentally different playbook. My favorite one, and I think Tony alluded to it. If you look at data in the US today, there is a secular decline in the number of listed companies in the US, because companies are actually getting delisted and becoming privatized for the reasons I spoke. So take private is a buzzword. You'll see it in literature, research, insights, and often in academia. And I often think part of the Indian private equity thesis is take public. There's a lot of private companies, highly valued. Matthew's taken 3 companies with more than 100x subscriptions in IPO because the public markets are wanting to have high quality companies. You're often been deprived. 90% of India's market cap is with 8 or 9% of the companies. We have more listed companies than the US. But are they really valuable? Are they scaled up? Do they have the governance? Answer is no. So there's a huge opportunity to build high quality, good private companies and take them public. The point I'm trying to say with LBO, GBO, take public, take private, cutting fat to building muscle is our playbook has to be different. Our playbook has to borrow from the best in globally, but to build ours. Right? We have to adapt, but we have to architect. And I really think this center can play to the pivotal role, be the nucleus of really creating frameworks, product innovations, and help educate the next set of leaders who are sitting in the room, the current set of leaders and professionals, and train them to the environment of India. And most importantly, as often, and that's my last comment, most often or not, you require, as they say, I have an 8-year-old child, and they often tell me it requires a village to raise a child. I think it requires a village to also raise an industry. And the participants of village are not just PE professional. There is probably a disproportionate focus on building private equity talent. I think there is enough of it. It can be refined, it can be built, but the complementary talent around it. Subrata spoke about it, Vivek alluded to operating partners. The bottleneck in our industry today is truly management talent, people who can run the businesses we want to own. And it's fundamentally very different. Having owned some companies, I often give the analogy of cricket, which is somewhat easy for people to appreciate. A lot of talent in India is built to play either test match or one day. Private equity wants to play T20. Literally, figuratively, we have 5 years, 4 quarters as our base case. And the first 5 overs, the first 5 quarters, which are the power play overs, are often very critical. So the talent is very valuable, but is that talent ready for the pitches of T20, or are they trained into one day and test? And I think this center, along with IIM Bangalore, which is one of the finest institutes I couldn't ever come to, can really play the role of not just preparing PE professionals, but prepare those management talent, those CEOs, CXOs we are fighting for. In my industry, to take Subrata, your world, I think our business has become a network place of assets on one side and talent on one side. We try to marry the two with a degree of strategy and conviction, put capital and see the party happen. But the reality is the supply side of talent to come and take over a situation and say in 5 years, we're going to do the transformation, which hitherto happened in 10 or 12, because you want impact at scale, but in an accelerated manner. Didn't happen for the longest. So I'm very hopeful, Matthew, Professor Thampi, that this center can really work with stakeholders beyond the PE professionals, get entrepreneurs. What does it mean? How can you solve your succession problems? How can you solve your boardroom and dining table problems with private equity? How can management talent really prepare itself to play T20 in this country? How can regulators and policy makers appreciate what they bring? They've done a phenomenal job, but a lot more had to happen. And it can continuously happen if there's an independent voice backed with global research and the quality of work, which IIM Bangalore is known for. So once again, I just want to I want to remind everybody of the importance of mentorship, gratitude. If there is anybody you want to thank, the time is now. And on that, Matthew, I want to personally thank you and congratulate IIM Bangalore and yourself and Professor Thampi. Let the excitement begin. Thank you.
Thank you, Mr. Amit Jain. You said some stuff which really made me thinking. Your input is money and output is money. I was thinking, what is it for IIM Bangalore? Our input are students and output are students. And then you said that you buy risk and sell opportunities. What do we do? Right? When the students come in, it's quite risky. And when we are placing them, we hope we are giving the company some opportunities. So thanks for that. To felicitate Amit, I would like to really invite a very special person who has played a very pivotal role in making this center happen. I would like to invite on stage Professor of Strategy, Professor Hrishikesh Krishnan, and our former director. Thank you, Rishi. We would now invite our beloved professors of who has been who has been, this center has been dedicated to all four professors. We start with Mr. Alok Apte, who is the son of our late Professor Prakash Apte. I invite Alok on the stage, and I would like to invite Matthew to hand over a token of appreciation to Alok. He will speak. Yeah. Alok, a few words from you. Yeah.
Good evening. It's a pleasure to be back here. IIM Bangalore was my home for about 24 years. It was a privilege growing up here amidst all the greenery and the intellect. You don't find much of that in Bombay. And it's always a pleasure to come back